Hello and welcome to another episode of the Stock Market Today video. It is Friday, September 5th, 2025, and we've got a lot to talk about today. We had a jobs report and a little bit of stalling action, a little rotation. What does it all mean? Well, to help us break it down, we've got Mike Webster, as we typically do on Fridays. He's our senior market strategist. How you doing, Mike?
Dude, I'm worn out. Today was a crazy day, man. This was a wild. I've looked at so many charts, and man, I'm gonna have to look at so many more this weekend to get a handle on this rotation. There was a lot going on underneath the surface today. A lot.
Absolutely. Yeah. It was one of those days where, started out great and then got kind of ugly, but it really depended on what you were in. You could very well have had, you could talk to two different people and get very different results on, what they thought of the day. So let's get right into it. And,
Sure.
of course, we'll talk about a few stocks today, including Toll Brothers, which is kind of on the side of the building, the home builders rotation that we've been talking about for a while here. We'll also talk about StoneCo and Micron in terms of stocks, but we will cover all of the sectors as we typically do. We'll cover some precedents because hey, we're still leaning on this 1980 precedent. And we'll also talk a little bit about what's going on with the markets. So
Yeah, and I
let's
do own Stone and Toll just for
you know what?
compliance.
Thank you for that. I do own StoneCo myself. I have home builder exposure with ETFs mostly. I think DHI is the only one that I went with on the individual stock side. Most of my
I own that
exposure.
too, and
You own
home
them
builder.
all,
Yeah, pretty.
really, don't you? But let's get right into the markets here. I'm going to go ahead and share my screen, and we can talk a little bit about where we finished. For the day. Of course, a lot of eyes were on the Nasdaq Composite, which has been showing a lot of strength. Got to new high territory intraday, and kind of closed pretty flat, actually down 0.03 percent. The S&P 500 had kind of a similar look to it. It was actually down, however. It had a closing high yesterday, getting back above 6,500, and then made some progress this morning, but couldn't hold on to it. It was down 0.37%. We have the Dow Jones Industrial Average that was down a little bit more, down a full 0.5%, and then the Russell 2000, which we've been really kind of keeping our eyes on. I'm going to go ahead and pull up IWM because this sometimes takes a little bit of time to update. But this was up a lot more intraday, but still a 0.5% close in the upper part of its range. That's no slouch. So where do you want to start here, Webby?
Man, dealer's choice, dude. You
Right.
you you pick it.
Well, let's start with the Russell 2000 since
Sure.
it's up. And this has been, it seems like where the strength has really started to move. Now, I should mention, and I know you don't look at it, but the 10-year Treasury yield, I'm just going to start with that because we did have the jobs report, a very big change in the expectations for what's going to happen in this Fed meeting that's coming up later this month. I think we were at what, 95% chance of a rate cut, quarter rate, cut. And then all of a sudden, things looked really different. It was like, oh, now, it's less than 90% for a quarter rate cut. Now we've got like a
A
50 basis
10%,
point, you
10%
know,
chance of a half.
yeah, so that was a big difference, and also what it kind of changed for the outlook for the rest of the year, looking at potentially, a 75 basis point cut overall by the end of the year. So very different in that 10-year Treasury. That's been coming down. It took a hit again today, but of course, that's one of the things that IWM, the Russell 2000, is going to benefit a little bit more from, right?
Yeah, I mean, going to the bonds, I don't use that as my analysis, as part of my analysis, but I did buy the TLT today, which is something I never, I never venture into that space, but it just feels like,
You're going
this
to
is
trade the chart, right?
yeah, I'll trade the chart. And this looks like, the beginning of something we'll see. And if it backs away, because it's right at that 200-day, but you see all of the activity of what was going on with the Fed funds futures because of the jobs numbers that we had this morning, that it was just changing the dynamics of everything in the market. Not everything, but a lot of things in the market in a big way. Let's go back to, yeah, the IWM. So this is my, where I'm leaning the heaviest. and this is where we're leaning the heaviest on swing trader as well. And we've been trying this for a little while now because it looks like we are, been rotating out of the mega caps and into this space. Now, some of the megas still look great, but some of them are faltering a
We're
little
looking at
bit.
you,
Like, yeah,
Google.
yeah. I mean, Google looks beautiful. I mean, let's
Mhm.
go to the weekly on that one. That looks like it's just wants to go a lot higher. Had that news behind it. Big move up on the week, 10% up on the week. That's going to happen when you get a court ruling that goes in your favor. It could have been down just as much, if not more, if it would have gone the other way. But it is what it is. Now, let's look at Microsoft. That's quite different, and so that one looks really sick. After gapping up on the earnings, having that downside, like that fade that day, and then the slow drift down. That's problematic. And let's go to Broadcom, which is probably what everyone is thinking of right now. I have a position in this as well, not as big of a
I
position as
do
I
have a
had coming
position in this
into
as well.
today because of the way it closed. I
Mhm.
kept thinking that it was going to come back, towards the end of the day, but it is reminiscent of that Microsoft. So, you do want to be, careful that doesn't just keep on. Sorry, I'm fighting a cough. That it doesn't keep on doing exactly what Microsoft did. So we'll have to see how that plays out next week, but it's really a mixed bag. And then you've got, some of the other megas like an Apple that was just, looking somewhere in between, like not strong like Google, but not weak like Microsoft. So, and even going to something like a TSM, this is what I'm just bringing these up because there's such a mixed bag out there. Like
Mhm.
that looks really good. Looks like it wants to break out of that flat base. Now go to, let's pull up AMD and NVIDIA. you know, then you've got the flip side of that. AMD breaking its 50-day. It looked like it was going to get support there. Same thing with NVIDIA. So, all this news has a lot of gyrations. And when you've got the mega caps that controls such a large percent of the indexes, since they're market cap weighted, it causes a lot of ripple effects, I think out there because so many ETFs where things are tied to and it was a tricky day, frankly. But on balance, let's go back to the IWM. This is where the money is flowing here, and in the building space, and related to really long term interest rates, coming down, and short term interest rates coming down, or at least that's what the thought process is at the
Mhm.
moment. And I think this has a long way to go because this is let's go back to the weekly for a second. There's been so many head fakes, and can you turn off your best fit, or
Oh,
I'll
yep.
like probably like have a conniption fit. The It's been so many times in there where it's like tried to go and then couldn't go, tried to go and couldn't go, tried to go, couldn't go. This one looks like it's for real at this point, and they always look like they're for real until the bottom falls out. But it is feeling different this time because it's not this rush in there. It's been kind of a slow grind higher, a very healthy rotation in there rather than just kind of a what other times it felt like kind of a knee jerk move in there. People getting offsides. They were probably short. Yeah, I would think a lot of people would have been short the IWM for a long time and long the Qs, and that trade to me feels like it's unraveling. Let's go to the Qs for a second.
And I just want to point out,
Yeah.
to your point, we had this really strong move, a little bit of a pullback, really strong move, really held the gains well. Now we're kind of into near-term highs, staring down at again some of the highs that we were looking at from all the way back here to a full year ago. Kind of approaching that resistance area. But yeah, let's compare that to the Qs because again, not as great a look here. And we should also mention one of the things we keep bringing up is for as much as this upside reversal looked really interesting here on the Qs, QQEW had that upside reversal, but really didn't get going. And it's still a little middling. I mean, yesterday was a decent day. Today wasn't bad considering. It did
But it's
close
stuck underneath
mid-range.
the 50-day, so
Yeah.
that's not a good look. And might as well go to RSP, which is how I like to look at the breath. And this is why there's so many mixed things going on. Like this is fine, but it's not powerful. Like this is your average large cap, since this is the S&P 500 equally weighted, so 500 of your biggest stocks equally weighted, and it's like, hey, it's right near highs, so if you take a step back from it, nothing to do here. And so we like to get in the nitty gritty on this program, but for slower people, people who trade slower, you just look at things, even just the 50-day, it's in an uptrend. The low has been above it. It only tested it for one day. So for the people who aren't as active, there's nothing wrong. But if you're active or you want to kind of catch those wiggles and wobbles, the way we try to do is you do have to pay attention to everything's going on. Let's look at SPY as well. And it's just this feeling of stalling today, but it
Hmm.
was more of a rotation stall, because as you went through screens, if anyone was playing through things like I was doing today, it was like there were so many powerful moves that were going on, a lot of medical related, biotechs doing well, and anything really in the building related space. It's not just home builders, is pretty much like pull up Home Depot and Lowe's. Like we were looking at those this morning on on IBD Live, and that looks really good, just starting its move. Of course they can always you know have
And do
a
you still have
breakout.
positions in those?
No, I backed out of those to
Okay.
concentrate in some others. But I have them via like the ITV trade that I
Right.
still have on, and nail as well. But I think those look really, really good.
Hmm.
And so you've got this money flowing out of the Nvidias, the AMDs, and those types of stocks, and then moving in financials. A lot of them were hit today. Pull up like Goldman Sachs and JP. I mean, well,
Yeah. Not
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 that
great
bad, but
looks.
yeah,
JP Morgan
JP,
was worse. Yeah.
yeah, and there were a lot of them in that space that looked even worse. Those aren't really that bad, frankly,
Hmm.
but given when you had things that were just moving so much, the divergence there, having JP Morgan down 3% was a big quality company. Like that's a real move on that stock, and that RS line going down, and it wasn't unique to JP. There was a lot of them
Yeah. I mean, you
that
had
just looked like that.
interactive brokers that that fell very
Schwab.
sharply about below. It's yeah, a lot of the brokerage got hit really hard. I mean, and Charles Schwab, we were going to look at that as a potential watch list stock on
Yeah.
IBD Live, and then it's like, oh, never mind. Well, let's change our mind there. Robinhood, which again had a decent kind of reversal the other day, right at 100. I mean, it wasn't a bad close there, but still not quite what you would have expected, undercutting. Whenever you have that upside reversal, you expect it to hold the low, and it didn't do that today. It finished above it, but it wasn't a great look for a lot of these stocks.
Yeah. And so, like things like that. I had Hood coming into today and I backed out of it because it wasn't
Hmm.
wasn't working out. Is it broken? No, but I would rather be quick than dead. And
Hmm.
if you're in it, using the 93.36 is probably a good final line in the sand if you didn't sell it today, or today's low, is how I would look at it. But it's tricky out there. It really is if you're an active trader.
Hmm.
On Swing Trader, we had a really good day today. We were in the right space, but we could have easily been in the wrong space. It was, it's, man, it's been hard. It's been
Hmm.
hard.
And you know what? I mean, when you again look at, let's go ahead and move over into the sector analysis, because
Sure.
when you look at the sectors, it it really isn't that bad, in terms of
Yeah.
how many sectors were down. The worst hit was energy. So this is XLE, back down to its 200-day moving average line, and then as we just kind of talked through, XLF was not looking great. That got hit, pretty decently with a 1.8% loss for the day. XLI, the industrials, that's right there at its 50-day moving average line, closed off its lows, but certainly not a great finish for it. XLU, which we've been kind of talking about as being AI adjacent to a degree, that kind of allowed for some of this participation in here. It's been pulling back here for a while. The relative strength definitely getting worse on that. And today, didn't help anything. Then we had SPY, just to kind of know where uh, the S&P 500 was. Um, XLY was actually basically flat for the day, certainly off its highs, but flat for the day. I'm going to throw in QQEW because it was actually up a little bit. Qs were up a little bit more, not
It
much.
definitely felt like stalling, just
Yes,
being
yeah.
frank, you know?
Yeah, and let's describe stalling real quick. It's the idea that you're moving up. You have to have some type of move up to stall from. So you're moving up, and then you just can't make progress. So especially given how much progress we made at the beginning of the day, the fact that we kind of closed flat. Does give you that feeling of stalling, and Bill O'Neill, the founder of Investors Business Daily, always called this a form of distribution. And we've had some distribution days in here. We've had a lot of stalling days recently, especially at the high ground. So it's kind of a little bit of a, oh, can it get through there? And it looked like it was today until it didn't. So yeah, that was really tricky. But yeah, stalling action. Anything to add on the stalling side?
Stalling, we could talk for hours and hours about, but we won't.
Okay.
But it feels like maybe the two of us could do some work on this next week. Is it feels like a lot more stalling, according to our rules of stalling that we worked on with Bill and Charles. That in a relatively short period of time,
Yeah.
meaning over the last few months, I just don't recall seeing that much stalling in there, which is, it's very interesting because Bill would always talk about you really have your distribution on your way up
Hmm.
before the market rolls over. So even though I'm very bullish, especially on the small cap space and the home building space, you have to be aware of both sides. You don't want to just put rose colored glasses on and see everything as positive. Like this action for this week, like it just wasn't powerful enough and it was stalling there. So when you stall, your expectation is to move lower, not to fall apart, but to move lower. And so you have to look at every chart and just be very objective with it and say, okay, what information is it telling you? Now, if you look back at a weekly or a monthly, there's nothing to see here. It's a nothing burger. The weekly looks great, frankly.
Hmm.
So it just depends on the lens that you're looking at and how active you're trading. If you could just look at this, just say it's just base building and doing what you'd like it to do. Pull up the FNGS for a second, because for a long time everyone was saying this is the only place where things are working, in the mega caps. And this isn't a perfect instrument, but it gives you the feel of the 10 mega cap stocks out there. And it was just base building. Now it's technically, it broke out of this space, this little mini flat base there. And so we'll see. A lot of that, I think, was the Broadcom and the
Right.
Google and things like that moving it. But you just keep an open mind. This looks better than Spy and or Spy and Nasdaq and the Qs, frankly.
Yeah. Yeah. So that was a breakout to highs. So um, it's a very different look, and where it closed in the range, whereas a lot of these indexes closed in the lower part of the range. Um, this at least closed at the midpoint or higher, and that's the same thing for the Russell that made it look a little bit different. Continuing on with
Yeah, the
our
big difference there is this is 10 stocks and the Russell is 2,000
2000,
stocks.
yes.
So I trust a sample size of 2,000 over 10 any day
Uh-huh.
of the week, man.
Yeah, yeah, absolutely. So continuing on with the sectors, again, looking at the sector spiders, XLK, which is technology. Again, not too bad. It certainly there were individual stocks in there, and considering that I think Microsoft is one of the larger ones in here, and how bad that looked, it's actually kind of impressive that it did as well as
Yeah.
it did. RSP was kind of next, which we already talked about, as well as the Qs. XLP, that was the consumer staples. So, this was up, but again, it wasn't like this was the strongest area. XLV, which does tend to be defensive as well, was up a nice amount, 0.3%. XLC, which that does have Google in there, as well as Meta is one of the big components. So with Google, I should say Alphabet, the parent company there, but with that doing so well, XLC, no big surprise, was among the top performers today. And XLB materials, this one was again mid-range close, but up 0.7%. And then of course XLRE was the big winner. Uh, real estate, whether that's REITs or home builders, a lot of those having a great day, over 1% gain. I will just throw in SMH, the chips, because as we noted, Broadcom, of course, which you and I both have a position in, Broadcom was the big move there with nearly a 10% move. Even when it was finishing at the lows of the day, still up almost 10%. So that was really helping out SMH, even though NVIDIA and AMD and some of the other big players, as you mentioned, were not. But TSM, Taiwan Semiconductor, also a big player in SMH, and so that was beating all the sector spiders, at least on the VanEck Semiconductor ETF. Anything else to add on that one?
No, we might as well look at the ITB because that's
Oh yeah,
something that we both
of course, yeah. I
both are trading. We've traded it on Swing
mhm.
Trader, and this
And
is
I
where
actually kind of scaled back on my ITB and moved it more to nail.
okay, yeah,
For because I'm
I
doing
have
cash accounts, so I wanted to kind of use use the buying power effectively.
wisely, yes.
Yes.
So yeah, I've got both depending on which accounts. So
Mhm.
this to me looks like the beginning of something. Let's go to the weekly on this one for a second. I mean, this beautiful, deep cup, nice rounded out. I would have wanted a longer handle, but some you don't always get everything you want. And this looks like it wants to go to new highs. So the way we're playing things on Swing Traded. I'm playing it personally is really in this home building space and related and probably keep getting heavier in that space, frankly, over the coming weeks. And if it plays out the way I think it's going to play out, but if it doesn't, we'll just back away. One thing that we talked about on IBD Live this morning was NVR back in 2000. Let's just do that really briefly.
And NVR still, looking strong recently, but we were talking about this all the way back in what was known as the .com crash, and
Go to
how.
August 4th of 2000 was the date
Okay.
that that's close enough.
Uh, well, you ask,
Okay.
I do.
So this was the beginning of this home building move back in 2000. You look at it and go, oh, this looks normal, right? But now pull up the NASDAQ at the same time and see how the market had topped in March of 2000 and it was going through this time where they were essentially moving out of the .com type of stocks and into your old type, like older type of companies in there, which if you pull up the S&P 500 is a good way of seeing how that space was holding in there tight, just being sloppy while they were selling off the NASDAQ and even pull up the Dow,
Hmm.
that just holding in there, those 30 stocks, kind of an older school type of stocks, while Nasdaq was getting killed. Now I'll go
I should
to
also mention that there was this kind of last ditch effort
yeah,
with the May 31st follow through day, if I remember correctly, in 2000, where you did have your Sun Microsystems, your
Corning.
fiber optics, Corning, JDSU, Keithley Instruments, SDLI. There were a lot of stocks that were still moving, through this time, but yeah, then they fell, and that's when things really got ugly after that.
Exactly. Might as well pull up Corning since you've got
Mhm.
this date on there.
And I do
Um,
have a position in Corning. I know we're looking at it in the past, but I do have a position in Corning right now.
yeah, and we could
And I
talk
had it
about
back
this.
then too.
Yeah, we both did, and
Right.
and Bill was all hot and heavy on this one, and
Hmm.
we all were, and that beautiful move out of there. So you have to keep an open mind, and just trade what's in front of you, and then that ended up rolling over. Let's go out to the next date of 5302 and go back to NVR, just to kind of see how this played out, and we could go to the weekly on it. And that monster, monster move, point down to the August 4th of 2000 where we were starting way down there, and this beautiful move, this huge rotation. Now pull up the Nasdaq so folks can
And I mean, this
see.
was a 38% correction here, but it came out of it in 2001 for another, move. And look, there
Yeah,
was a follow through day. A lot of people, don't remember follow through days actually happening in the Nasdaq, a number of them, with
dude,
some
a
of them
lot.
going up. The Nasdaq went up 40% in its like 79% decline. You would have these 40% rallies sometimes. So that, yeah, that was one of them in 2001 that happened shortly after 9/11, in fact. So
Yeah, so
yeah.
I just think folks should go back and study that time frame because there's a potential that you get a mini version of this. I'm not saying the Nasdaq falling apart, but just a rotation out of some of the stuff. They pause. They don't have to go down 70% like it did back then, but just pause, maybe base build, and other things kind of take the baton and run. That's the thesis I'm working with right now, and we'll see how it plays out. But it really feels like there's a big move of a lot of money into this just the building space, not the building of AI
Hmm.
centers, but building of anything else, pretty much.
Yeah, and to that point, and I'm bringing this back to the present here. AGX, which is kind of in that heavy construction area, known for a little bit of the infrastructure, data centers, and things, and that's what's been kind of working for this. That kind of stuff getting hit hard, whereas your, it's not sexy, but your WMS. Advanced drainage systems with corrugated pipe, or your MAS, Masco with plumbing and cabinets and things like that. These were doing well in this construction products area.
Yeah,
BLD,
and there are tons of stuff in that
BLDR,
yeah,
and the list goes on, right? Again, especially those things that were kind of in the for the residential space. But you know what? Let's maybe talk. Since
sure.
this was one of the stocks that we were going to talk about, let's talk about Toll Brothers coming out of this nice long cup with handle this week, and a really good close.
Yeah, so I do have a position in this. We've got it on Swing Trader. It's too extended to initiate here, but you watch it to see if it gives you an entry. But this space, if you start seeing these stocks come down and take out this week's lows, you'll know that, hey, it's a rotation that didn't end up working out. And that happens all the time. You get a rotation for a short period of time and then it reverts back. And you never know how that's if it's going to play out, but you need to know the signs. And so the first sign would be coming back underneath that pivot, but really coming down underneath the Tuesday morning low. That would be saying, you know what, there's something wrong here, and it needs more time, or maybe it's not going to work out. But you know, we went with Toll. We could have gone with almost any. Throw a dart at the home builders. They all look the same. I'm also trading DHI, and we've got that on Swing Trader. They all look the same. I think this is the strongest one, at least at the moment. But
And I
that
do have a
ranges.
position in DHI as well.
Okay, yeah, and then you could also just do it through XHB, which we have on Swing Trader, and I have as well. And this, that's one way to play it. ITB is another way to play it, which we're trading on there, and I'm trading. And
And
so,
I should mention that I brought up Nail, which is basically like ITB, but it's a triple leveraged. So, just in case people are wondering what that is, not for everyone to be in the triple leveraged, but you have to make sure that you know how to cut your losses when they happen. And by the way, I've had a number of losses in Nail that even recently, where I tried a couple times, didn't immediately work. But right now I've got a good gain on it.
the trick is to nail down a good gain on that.
Right, exactly. Um, let's move over to Stoneco. This is another. This is in the finance area, Brazilian company. I do have a position in this
As do I.
myself, and yeah, for as ugly as finance looked, was it because this has the Brazil exposure? Brazil
I think
looked
so, because
decent.
pull up ERJ, which is
ARJ also looked very good. Yeah.
yeah, another Brazilian,
Hmm.
quite different business than Stone.
Hmm.
And
And
what
even though
I
Melly is Argentinian, it's got a lot of business in Brazil. But I mean, that was kind of middling, but very different than those. But back to Stone. Give us
Yeah.
your take here.
So as a contrast, pull up like Visa or Mastercard. So our version, that looks weak. Mastercard looks weak, but yet the Stone looks, really solid. And it's kind of a classic little, if you just started reading charts, you know that that's a cup with handle. I mean, it says textbook as it gets. Nice little shakeout in the handle, upside reversal at the bottom, and then you break out through your standard pivot, kind of pause a little bit, stay above your 21 day. Like this is as textbook as it gets. It doesn't mean it's going to work out, but what you're doing is trying to put the odds in your favor of finding things that behave like this. It doesn't mean that they go up every day, but you want to know what's normal and natural. And so like yesterday's close near the high gave you the expectation that something like today might happen, and that's what happened. So every day you look at a chart and say, okay, what's my expectation for tomorrow? And as long as it does something like that, it's acting normal. When it starts breaking your expectation, that's a danger sign to say, you know what, I just don't know, and it's a total crapshoot. This should go higher. Doesn't mean it will, but that would be normal and natural for this to, run up to maybe 20 or so. And
Hmm.
we'll see how it plays out.
And I can't remember if it was on a day where I was covering for you on the SMT video or if it was on the Monday, but I did bring this up, um, on the SMT video back then. So hopefully people got into it
Oh, good.
at that point. I was actually a little late myself. I didn't want to buy it right before talking about it on the video, so I was planning on waiting until the next day, and I plumb forgot, and so I was, I think, buying it in here and in here. So, um, yeah,
I
sometimes
forget
it
all the
happens.
time, man. Lots of moving parts.
Yeah. Now let's talk about Micron, which is it's in the chip space, but it's also this computer data storage. We've been seeing a lot of decent moves in the computer data storage with Seagate technology that had a really strong day today. WC is a position that I have. Unfortunately, as is almost always the case when things go up like this, I don't have enough of it. It was much smaller than it should be. But let's talk about Micron and what you're seeing here.
Yeah, so this is more, I'm not trading it. For me, the day would have been yesterday to buy it. And because it was going over that prior resistance plus a downtrend in the handle. Today just felt a little bit extended. But from a standard pivot, that's with my swing trading hat on. With a position trading hat on, it's right there, 2% past its standard pivot. This is where you do end up buying it. So I think that looks good. It was just a little bit weird how there's just so many gyrations in this general tech space. But you have things like pull up SanDisk. I mean, that I
Hmm.
was trading that. I sold it either yesterday or today, just because of other stuff to move money elsewhere. I was not expecting a big move. Like I think I sold it yesterday. Was not expecting this. There was no reason to sell it. It was more just needed the capital for something else. It was a small position, but some massive moves in this area. And I was trading the WDC and stuff like you were trading too. And that's on the positive side. So you're just always looking at everything. So sure, the Nvidias and AMDs look bad, but these look like the money is going from that space and just coming over here. So the Micron looks like it's in position, and I think it's worth studying over the weekend.
Hmm. Mike, I'm going to have you go ahead and take
Sure.
control here, and then what we'll do is we'll also wrap up with just a revisit on the 1980 precedent, because when we talk about what to do now, that might be very instructive. But go ahead and take it away, Mike.
Sure. Okay. So you can see my weekly chart. So this is our time to do the Bob Weir. Take a step back and not look at all the noise and just see, okay, what does a weekly candle tell you on here? Really nice in a lot of ways. I mean, the part that's bad is the top wick is bigger than what you'd like, but the body, meaning that the distance from your open to your close, really dwarfed anything that we've seen for the last 3 weeks. And so that's telling you there was a lot of movement on there. I know that there was a lot of fear in the market on Tuesday, but we were able to get through that and close a lot higher. Yes, we stalled today, so we're off the highs, but it still looks good. And you want to stay above this week's low, because that was a kind of a critical place, critical test that it passed. And same thing with the Nasdaq. It passed that test with the very weak open on Tuesday, and then we went up and hit the new highs. It's not a bad looking candle. Would I have preferred it to close at the top? Of course, but when you look at it through this lens, it looks solid. Now let's look at the regression lines. We'll start off with SPY, and this is kind of inconclusive, because it's looking weak from this lens. Because let's just let everyone know that your starting points on here, if you want to do this at home, on 5/12 was your first date, and then we go out 50 trading days, and so 7/23 is what I have on here. And so we look at 50 data points. We put a line of best fit, which is your white line, and these are just you know, uh, 0.75 standard deviations, and 1 standard deviation below it are the green lines. And when you come through here, let me blow this up a little bit. When you come through this bottom one the way we did, your expectation is to kind of go straight up to your white line. That's your home base or your mean reversion trade. And we ran into problems today. Clearly, at least we close still above your 1 standard deviation. So this is not broken, but it is bent, because if we zoom back
And
out.
I should mention that this is a little reminiscent of what you were talking about, a couple Fridays ago,
Yeah,
where we did get through that dashed green line, and you were like, okay, this is where you punch it, and then it was like, oh,
yeah.
it didn't get up to that white line. It just kind of meandered a little bit, and then we had another test. Should also mention that just because it breaks that solid green line doesn't mean, oh, the trend is over for good. You can give it a little tolerance, in which case this one did come back into the channel.
Well said. And so with this, if you just look at the time since August 1st, this is weak compared to prior to August 1st. So you're looking at this and always being objective, even if you're bullish as I am, you look at this and just go, the character is starting to change, and it's not that same rate of advance in the same way that it was before, because you can see that it's living in the bottom part of it, in the southern hemisphere of the regression area. And that's not where you want to be. You want to be in the middle to the top part of it, dragging it up, not just living along the bottom. So it is just objectively, it's weak, but it's not broken. And so what are our signals here? Taking out today's high, really, that would put you back above the 0.75, the minus 0.75 standard deviations below that line. And that's where you would want to, if we get a gap up on Monday and go above today's high, that's where I would be gunning it in that space again. But right now, not so much. Let's look at the NASDAQ. Same basic thing, just it's not broken. Like you said, you can be underneath the 1 standard deviation for a few days, but you really have to pay attention to it there. And so it was only down there for 1 day, really kind of 1.5 days, and moved back up there. But still, it has this overall feeling of being weak, and that character change that happened with that break of the 21 day. And that's what we've been talking about for a while, that when you've been trending above your 21 day for a long period of time, and then you finally break it, you do get this character change. So, given enough time, we might start a new regression line and actually start it over here on August 1st, and then do a new trend, which would be kind of just a different slope. But it's still too soon to do that. We'll go over to the 50% retracement. And what we're doing is
Just real quickly,
yeah.
okay, so what about IWM? Have you done a channel on this one?
No, because it's still a little too
It's
early.
right, exactly. I was going to say, because it's so different from SPY and the Nasdaq. When do you start doing one here? Because
Yeah.
what do you use as your anchor points?
Well, that's the tricky thing. Like, so you could just go back down over here and do that, but and do something like that, but it doesn't, that's okay. Let's go back to, like, something like that. Somewhat works, but it really feels like the inflection point was on August 12th.
Hmm.
So with that, let me get rid of that and start it again. um, if you're starting it here at this inflection point, we just don't have enough
Too
data
soon.
there.
Hmm.
But now you could also, and it's funny that you mentioned this because I've been just contemplating this so much and starting it on this date there
Hmm.
and going there. But it's not the standard one that we would use, and obviously that slope is a bit too steep. But somewhere in that one of those, this is an art. Even though it's numbers, it's an art of where you start it and where you stop it. But this is probably the one that makes the most sense to me. But I'll do more work on that and we'll circle back to that. How about that?
Yeah, that makes sense. Because again, stay tuned. We'll have the updates as they come.
Yeah. So going on to this one again, we look at all these charts to kind of paint a picture in our mind of, are things clearly bullish, clearly bearish, somewhere in between. It's always somewhere in between, but you want to see where things are leaning, and that's why we start off with the weekly, and then we go through all this noise. And with this, the 50% retracement, again, in art, you can start them anywhere you want. This one, I'm using the August 20th low and the high from the 28th, and just saying, okay, well, that was our kind of move that we had. Are you in the upper hemisphere or not? And you are. You're in the northern hemisphere still, so that's a positive. Let's look at the NASDAQ. And same thing there. I'm using the August 20th and the 28th. Did I do one on IWM? Nice. Yes. So August 21st is where I was doing it there, and then just doing the next day, the 22nd. And you can just see how much stronger this looks. And that's why I'm, been moving over into this space versus the others, because it just is showing so much strength.
Now, just a question real quick on
Yeah.
these, because we did break above that red line, right? So at what point do you start redrawing your lines here? Are you waiting for kind of like, oh, we had a short-term top and now we're pulling back, and you got to have the a low, or how do you do that?
It's an art, and I slice it all sorts of ways. So, sometimes I will, do it from all the way back here, because what you're doing is you're looking for extreme levels, right? It was at extreme weak point and then moved up to something. And a breakout is a clean thing, or in this case, kind of a shakeout down here, as it was on August 1st, up to kind of this peak here. You could even do this peak. But at some point, once you start living above it, you just delete it and move on because it's proven itself. So from this one, it proved itself. You can also do them from just days like, from just like a day like here up to this one. Oh, it's being temperamental with me. But, those 2 days. And let's try it again. Um, and then like these 2 days, like, so you can slice this. I do this on an intraday charts. I do it all the way up to monthly charts, and there's not a one perfect place. So that's again why it is an art. That's a really, really good question. Sometimes there's only one way to do it, and then
Hmm.
it'll be so obvious on the chart, like a clean breakout up to kind of a swing high. That would be your or just up to, a high that then gives back a quarter or so more of it. It's clear that that's the retracement level to use. But other than that, it becomes really an art. You know it when you see it.
Hmm. And especially looking at a lot of different charts, a lot of different examples, playing with it yourself. As you said, you kind of have to make these indicators your own, really, just by playing with them. And
Yeah.
that's how you get better at it and kind of learn that art. Just as when you were a kid, you did your finger painting, you did your coloring. Sometimes you were in the lines, sometimes you're out of the lines, and that's how you learned what to do.
Well said. I was not very good at coloring.
I still
So,
am not.
so here's the levels chart. Let's look at SPY. I tried to clean this up a bit. I would just put the green one up at the current high, and then the yellow is, kind of the first line in the sand, and that would be Tuesday's
Hmm.
low. And you can almost even say that that's a red one because that is an important level because we on Tuesday morning you didn't know we could have had a waterfall
Yeah.
sell off. And so on that day, on that gap down, you got to take some action, but you're trying to not throw out everything, just anything that maybe you got over your skis or some things that are triggering some sell signals or just backing away from some stuff. But the fact that it made a stand there, that becomes an important level. And then the next one would be the low from the 20th, but I didn't mark it there because I didn't want it to be too busy. But the next level would be the low from August 1st. That's probably the most important one on this chart because that was a key change in character that we keep talking about. Then you can go back over to the 591.89, which happens on the June 23rd, or the final line in the sand is down here, which hopefully we don't get down to the May 12th low. And that's this is how I like to do it, where you don't have to do it's not a sell everything type of thing. Is as you if you're a slower trader, as it starts hitting these, you start backing away and backing away. If
Hmm.
you're swing trading, that's a different animal. You're a lot faster and everything. But if you're position trading, which probably a lot of people who watch are doing, these are kind of the levels of where you want to start taking some action as they go through it. If you're the type of person who maybe doesn't even trade even once during the week, that's where you would look at these lines in the sand and say, okay, it's really starting to break down. I need to start taking some action. So it just depends
And
on
as
what.
you said, like you change that yellow to kind of a red because sometimes you'll have multiple things happening at the same time. So now Tuesday's low is pretty close to the 50-day moving average line. So if you break below that, you're breaking not only that upside reversal, but you're also breaking below that important 50-day moving average line level of support that a lot of people use. It can be a self-fulfilling prophecy, but just because a lot of people use it doesn't mean you shouldn't too, right?
Yeah, well said, Justin. And so same basic levels on this chart. This is the Nasdaq, and again, the level from Tuesday is the most important, and then the other ones. And so just get in the habit of doing this on your charts, because what will happen is at times you might get carried away with a theme. Like I'm very carried away with this theme of housing and small caps working, really more so housing than small caps, because if the banks don't end up working out, there's such a big part of the IWM that
Yeah.
might be tricky. But the home building space and related, that's the thesis for now, that I think it could be the very beginning of a really extended move, because when that group starts moving, they can last a long time, like we saw with the NVR back in 2000. But I still want to have lines in the sand on there, because if they start breaking through them, then I know, hey, I was wrong. And then you
Hmm.
start throwing them in the towel, maybe not all at once, just gradually doing that. Let's
And
go.
you and I have both been wrong on IWM multiple times over the last year or so. But the reason why we can try it again is because we always kept those losses small. Or
Yeah.
yeah, we just didn't get hurt. So it kind of gives you that freedom to try again. I should also
Yeah.
mention that I'm not sure if this is still the case, but I know that the financials, the banks and all that were about a 20% of the IWM, roughly. I'd have to rerun that. But you also have, again, when you have the lower interest rates, if it's easier for those smaller companies to borrow with more better terms, that's something that you would assume would be better for them, as opposed to something like Apple that's sitting like on a mountain of cash. They don't need to borrow. You raise rates on them, and they just, okay, well, we'll go into our cash reserves. But it's very different for the small cap companies generally. So you've got that
Yeah. I mean, the
potentially
banks,
helping them out.
yeah, the banks, they like the spread there on the yield
Mhm.
curve, and that's a whole topic for another day. But hopefully that's a wind at our back there too with the IWM, because yeah, I do think it's about 20%, give or take, of
Yeah.
that.
A lot of them
So
regional banks.
here's SPY with just keeping it clean. Just the 21 day, your low is still above it. So that's good. And then let's look at the composite. Same thing there. Your low is still above it. So that is good. Let's share my other charts. One sec. And okay, we will go over to the Webby RSI. And this is this little histogram down at the bottom. That is just this tiny little baby candle. And that's saying that the distance from your low versus the 21 day is just really teeny tiny. It's still positive, but you want it to be a lot bigger than what it currently is, but it's still hanging on. Let's do the Nasdaq. Same thing there, just this tiny one. But let's look at RSP. It's telling you, it's really not doing what you'd like it to do. But let's look at the IWM. And quite different. You can see that that distance from the low versus the 21 day is expanding. You'd like to see it expanding more, really in the 2.5, or even higher range at this point. But at least it's on a relative basis a lot stronger than what we're seeing with, let's even look at the Qs.
And I mean, when IWM, when everything else was breaking their 21-day lines, IWM was holding at its 10-day line, for those of
Yep.
you that look at it. So
Major, like just such a major divergence, and a lot of folks who've been burned on the IWM for the last 3-4 years, as I have been, they're gun shy and they're like, oh, I want to wait weeks or months, for this to prove itself. Well, if you do that at that point, then you're going to be always making excuses. Oh, now it's too extended, I'm going to wait for a pullback. Then the pullback's going to happen and you're going to say, okay, now it's rolling over, I don't want to buy it, and then rinse and repeat it, and it just keeps on happening. So you've got to find a system that works for you and trust it. And so if your instruments are telling you this is where the money is going, you've got to be that goldfish you brought up this morning on IBD Live, from the whole Ted Lasso thing of, you just forget it. If no one knows what I'm talking about, like a goldfish has no memory, at least that's what people think. And so you just forget that you just got burned all these other times. Just follow what your rules tell you to do. And if your rules say don't trade IWM, then don't. But if your rules say it, don't make excuses, which I hear a lot of people doing. So let's go to SPY and do the Bob Marley chart, my daughter's favorite one. And this is in the green zone. So from that standpoint, it's still all good because the green zone is within 4 ATRs off your high. That's what that measurement is down here. And you're still better than 2 ATRs off your high. So nothing wrong there. And nothing wrong with the Nasdaq either. You're, right up there, less than 2 ATRs off the high. And the IWM is coming back quite a bit because that had been a dog for a long period of time. You can see this chart. I mean, this is what we're talking about, how sloppy, this has been for such a long.
you basically flatlined it at 10. Like, okay, once it
Right?
gets under 10 ATRs, forget it.
Yeah,
It doesn't matter.
that got really, really ugly there for a while. So let's see, stop share. Yeah, that was, I would suggest people this weekend do a lot of screening. And I would do it in a way of look at the extremes, look at what was up the most this week with a high closing range. So you can go into market surge and do those up a few percent on the week and at a closing range for the week of, let's say, 70 or higher. And then also do the same thing on the ones that were down a lot. Let's say they were down, 3 or 4% for the week and close in the bottom, let's say 25% of the closing range, and study and see what themes you're seeing. When you run that, put the sector in as a report item in your custom screen, and then look and see, okay, oh, well, all the home builders were up a lot and all the XYZs were down a lot. And it'll give you a sense of where that rotation is. Frankly, if I know a lot of people don't have the time to do it, but you would really benefit from doing a really wide screen. I'm going to tell you, it's going to scare people, but just do something as simple as stocks above $10 above $25 million volume, not share volume, dollar volume, and above their 50-day and above their 200-day. It'll give you probably around 1,000 stocks, maybe 900-ish, and not ETFs, exclude ETFs, and just look at all of those and sort them by, what was up the most on the week. On the way down is one way you can do it, just to get a sense of where is that money flowing, because so much going on. And that's what I'm going to be doing over the weekend. I'll actually do bigger screens than that, because this is an important time. It frankly is, and it's going to be
But
very, very
for
tricky.
those that got scared by saying, "Oh, just go through 1,000 charts," you can also, do some filters to kind of, you know, triage a little bit. Maybe you
I
stick with,
wouldn't.
yeah, I know you wouldn't, but not everyone has empty nest. Some people are still taking care of kids and everything like that. So look, there are things that you can do to sort. And so if you don't get through all 1,000, you can sort, and sometimes that allows you to kind of get through, yeah, the top, the ones that are most important, and you can prioritize. So I don't want anyone to not do the process because they're like, oh, I don't have time for 1,000 charts. Better to do a smaller sample than nothing, in my opinion. Um,
Well, we'll
y-
disagree there, because 1,000 is a small amount of charts, frankly, really.
for
But
you, not for everybody.
but
So,
that's how you'll
but
get
you got to
your
start somewhere, right?
that's how you'll get your feel for the market. So
Yeah,
if you don't have a lot of time, just look at the growth 250.
yeah,
That's your easiest way. But you're not going to see a lot of the things that got damaged
right.
there. An easier way to do it for the folks who don't have the type of time, just do by dollar volume, just the top, whatever, however many you can do. If you can only
Yeah.
do 50 stocks, do that. 100 stocks, however many you can do, you are going to get so much information if you do that on a regular basis. I cannot stress that enough. It's so important for your subconscious to be picking up on all the stuff in the charts of what's moving, what's not, what's acting normal, what's acting abnormal.
And it should also be mentioned that when you're doing this look at 1,000 charts, you're not analyzing 1,000 charts.
Oh no.
You're going through space bar, going through very quickly, and just allowing the chart to kind of, the ones that are special to jump out at you. And then you might stop or flag, but you do not have to analyze 1,000 charts. So again, I
Oh,
just don't
no,
want
no,
people to
no,
be
yeah,
scared there.
yeah, I didn't mean to scare you guys, but you
Well,
can
you
go
started
through.
with, I don't mean to, I'm going to scare you, but
No,
um,
that's true.
yeah. So, just real quickly, because I know we're already over time, but I wanted to make sure that we also spent a little bit. We forgot
Oh,
to go
yeah.
over XBI. This was just an area of strength that we should point out. When we went through the sectors, this was something that definitely stuck out. And look, XBI, unlike a lot of the sector spiders that are very concentrated, this one is pretty spread out. Your top stocks in terms of weighting are like 3.5%, and there were a number of stocks that were contributing to the strength here. So this was up over 2%. This is another one where a little bit of this rotation where it has been out of favor, but has recently, like IWM, like the home builders, has seemed to be coming into strength. So
Yeah,
I
I'm glad
also,
you brought that up, because I do have a position in that, and we do have it on Swing Trader, and we added back to it today. We had backed away from some of it yesterday or the day before, and then added that back in a little bit out of position. I mean, we had it, we were just making it a bigger position today, because this is where the money was flowing. And when I was doing the screens throughout the day, there's so many of these biotechs that I wouldn't want to trade on an individual basis, because the risk involved with FDA and all that's, things that can happen. But collectively, and as you said, a really broad based one where you can get one stock that gaps up 40% or something on the day, that's not going to have a material impact. Same thing on the way down. It could gap down 40%. Unless there's a theme out there, it's the collective thing. And it feels like, and I think it's an interest rate thing is helping it as well. It's just the lower the interest rates, the easier it is for R&D. And so this is another space. I meant to mention it. I forgot. Oh, you're going to do the thing that I forgot about.
no
Perfect.
problem. Yeah,
It's
we
been a
got each
long
other's
weekend.
back. So, oh, you know what? I have to go to NASDAQ first. So let's go there. I didn't want to do it while you were talking. We're going to go back to 1980. So for those that have been watching the show for a while, we've spent a little bit of time on this, a lot of time maybe. But let's go back to November 14th, 1980. Ronald Reagan had just been elected president, and that was right in here, and we got this move off the 50-day moving average line after a long extension above the 21-day moving average line. And just like August 1st, we had this really bad break below the 21-day moving average line after that long time above it, and then you got back to new highs, one more pullback, and then you started moving to new highs again. So is this precedent still in play?
Yes and no. Okay. So what was important was for today, and let's not go there yet, but for today, for us to take out the old high, which in this case took out the 200.83, which was its old high. Now, obviously, back then it did it in a quite a different way. It just powered through there. Now, let's go out to the next date the, that I gave you. I forget what date that was.
So we're going to go up to March 12th.
Okay, so
1981.
when it went through that 200.83, it kept going, and then it ran into trouble. And so earlier today, I was worried that it was the day after the 208.29 where we were going to start coming down, because the thing is, this one only lasted a couple of weeks into new highs and then rolled over. So when you're using a precedent, you don't just use it when you want, when you like what it's telling you. You use it until it's broken. And right now, the fact that we stalled at new highs versus powering into new highs, this one is now on the fence. And if we don't power higher next week, then I'm going to be throwing out that precedent and just saying, okay, it's either fast forwarded to the point where it broke down through the 50, or it's just something else now. And that happens all the time with precedents. You have to be willing to throw it out. But this one is still tracking with a little bit of a difference today. And that, you can probably relate that to the jobs numbers and the broad
Right.
combo of the two. And let's go out.
And it's also worth mentioning that, again, we are seeing this rotation. So the NASDAQ is not necessarily exemplifying the strength that we're maybe seeing elsewhere. It is also interesting that you talk about this 2-week period, that we have. And anything coming in 2 weeks?
The
Oh,
Fed
yeah,
is
the
on the
Fed.
17th, right? Yeah.
Right. So,
So
um,
that's what I've been thinking too. Is like, okay, is it going to be one of those things where it's a buy the rumor, sell the fact type of thing? And we'll just have to wait and see how things play out on the Fed day, because everyone knows that we're going to be cutting. It's it's not a surprise, or they're going to be cutting. Based on the Fed funds futures, it's a certainty at this point that it's going to be a quarter or half. That could change on Monday. But at this moment in time, no one is even betting that we're keeping the rates the same. So it's not a surprise. If Powell comes out and cuts it by a quarter, well, that was already baked in. Then you just have to look at the reaction. But yeah, that's been worrying me, the timeline with the Fed. But what I wanted to point out on here is, look at that day where you're in March there, where your low had been above your 21 day for 10 days in a row, right as it broke through your 50 day, or held your 50 day. Could you just point to that?
so are you talking about like right in
In
here?
March, yeah, right there.
Mhm.
So what you want to pay attention to is, if we run into any trouble like that, is wait for your low to get up above your 21 day and start trending above it, 5, 10 days plus. And then that's telling you that the character has changed, and you saw that there. And then eventually it breaks through the 21 day, rinse, repeat. It starts all over again with a different changing character. You never know what that's going to be. So let's just go back to our current chart, just since you have this fresh in your mind. And so, do you see the difference there? Before, we powered through and just would have been on our way past the 22,000, but now we just don't know. We have to wait over the weekend and see how things play out next week. But again, just to be clear, if we don't go into new high ground next week, then I'm going to be throwing this precedent out and looking for another one. And you can't always find one.
Hmm. Yeah, that's and this is why we also have all the other indicators and rules and market school rules, for instance, that help us to make sense of things in a very rules-based fashion. We had Scott Bennett, of course, for the invest with rules. So that's definitely on my
He's a
mind
cool
right now.
dude.
Yeah. But I think that wraps it up for us this
Yep.
week, and we will see. A lot of news to digest with the jobs numbers, a lot of charts to look at this weekend. But we will be right back next week on IBD Live and also Stock Market Today to help you get through it. So hope you join us for IBD Live at investors.com/IBD Live. And we'll see you back here on Monday on the Stock Market Today video. That's going to wrap it up for us. Thank you so much, Mike. And we will see you all later. Have a great weekend, everybody.